good evening, or good morning, wherever you are. Welcome to the channel. My name is Jerome, and this is Psycho Silver. Thank you for choosing my show today. I do hope that you are counting your wealth in ounces and that you're holding your word, especially to yourself. Two very important things. Two very important things right now. This is called Psycho Silver because we're going to have a hard look at psychology, particularly the psychology of finance and economics pertaining to the bottom 50% of people, the bottom 50% of the people that hold only 2% of the wealth, America's poor. What do they believe? What's the misinformation they encounter when they attempt to educate themselves? What's the story being sold to them with the red herrings and the straw man arguments and so on and so forth? We're going to keep an eagle eye on the Comex vaults and the LBMA vaults. We care about silver because silver is the most important money. Silver is the only money. Silver is money. It's the oldest money. It's the perfect money. And it's the only money. I'm very, very thrilled to be starting this channel right now because the events that are taking place in the world are once in a generation. We have a front row seat to the end of the dollar as we know it. I'm sure there'll be something that's called the dollar after this dollar is over. In a way, the dollar ended in 1964 when they took the silver out of the coinage. And similarly, we will have another adjustment and it'll be part of the GR. I won't say that word. We're not allowed. It's a bad word to say. Very naughty word. You do not say the GR word, but you know what I'm talking about. And if you're part of the silver stacker community, I know how smart you are. We see through all the bullshit. I got into sound money and economics and finance through the silver stacking community because the silver stacking community is full of really bright individuals. And they're also very attractive and cool. Silver stacking community is full of studs. This is a fact. And not only did I learn about sound money and preservation of wealth and history, but I also got the courage there too, because it takes courage to speak up and it takes courage to go against the crowd. And that's what we do. We're going against the crowd right now. And I am pretty sure that it's going to pay off in a big way. I'm all in on silver, all in, both in terms of how I'm choosing to save and invest, but also in creating this channel. I'm all in. And I hope that I don't want to convince you to go all in, but I want at least a few of you, some of the new ones, to dip your foot in the pool, get some silver coins, study up on this. You're going to learn a lot. So for anyone that has followed this channel from the Silver Bugs community, from Wall Street Silver, or if I post this on Twitter and you follow a link having to do with silver and you land on this channel, thank you so much. Please give my content a like. Or if you do not like it, leave a comment and tell me what I could be doing better. I love the feedback. The goal for this channel is we're going to keep it informal. We're going to say shit and fuck, but we are going to give good information and keep it entertaining. And I would love to grow this channel to a critical mass and one day be able to get on like really good guests that are in the resource sector, in the precious metals sector, that are into economics and finance. And I would love to get people that aren't necessarily related to the, a lot of the same old people that are being interviewed. But I would love to get people of notoriety and just ask them what they think about finance and economics. And this is going to be such a huge topic over the next 3-4 years. The same way that everyone became a health expert recently and a virologist, everyone's going to be an amateur economist. After what is coming does eventually arrive. What is coming? In more ways than one. I was told there'd be a storm. I was told that we may find ourselves on the precipice. I do not want to shy away from the truth. However, gotta be careful. Gotta be careful because the censorship is getting out of control. I did see in an article recently. No, it was an article. It was a social media post. Instagram and Facebook are now censoring information having to do with the central bank digital currency. They don't want you criticizing it. And they probably just don't want any of that information coming out from anyone except them, right? We know these fact checkers are just so full of shit. And never once do they have to apologize for all the things that they get wrong. But yeah, if you post things about the GR, I won't say those words, or the central bank digital currency, it's on the radar now. And even if you do post something that's accurate, they're going to dispute some part. If you're talking about that stuff, they're going to dispute some part of it. They'll find something small to quibble over just so they can get their banner on your post, cast doubt upon anything you might say. And then your friends and your family open that up and they're like, wow, this, so-and-so is sharing fake news, or it's there to cast doubt. And again, here is the psychology. Very simply, all that needs to happen is a banner on the post from some sort of perceived authority, and already they're casting doubt upon whatever you're saying and making it seem illegitimate. We saw that a lot recently, having to do with the big T, big T 45. We saw that having to do with that. We saw that having to do with what occurs on November 8th. Yeah, all things you got to be careful talking about. And like I said, I'm not going to shy away from the truth, but we're gonna dance around a little bit. We're gonna stick and move, and I will just infer and use sarcasm. And we're going to talk about whatever we want. If we find something interesting, we're putting it on this channel, okay? Doesn't all have to be silver and finance, but I'll keep it relevant because that is why you're here, hopefully. But hopefully you come for the silver and the financial psychology, and you stay, because I'm going to bring you lots of cool stuff. And that's what I did today. It's just me in an internet browser, okay? I'm going out into the internet for hours and hours each day and curating the best content to show you and give you my comments and analysis. I have spent years developing these social media accounts, following the most interesting people with the best takes. I have all this information coming to me. And what's crazy is, even if you started today and you began to collect all these accounts that you're following, it's tougher than ever because of the shadow banning. It's tough to find all the best people out there that are giving the best information. And I've been doing it for years. And I know who I ought to be listening to. And you can judge for yourself, but I know who posts the interesting stuff. So let's jump in. I have a pretty long episode again today. I once again had to throw out a bunch of stuff. This is quite a time. Front row seats to the end. And it's during the age of information. There's so much information, it's hard to even know what you ought to be paying attention to. Thank you. Let's jump in. First thing I have for you tonight is an article from a source that shall not be named. We shall not name this source, for they are forbidden. Interesting headline here. Searches for real estate market crash exploding as mortgage rates surge. I'm not going to read this whole article, but I said, since this is coming from a source that sometimes they might be sharing fake news, or so I'm told such a thing. So let's fact check these folks over here. Let's see if that is true. It's a good idea I want to use these Google Trends more often. It's going to give us a good idea of what the normies are thinking. And where are they being led? By the psychology of finance and economics, your headlines from Bloomberg and CNBC and I guess CNN to some extent. And especially is the NPR. They're so good at making it sound very measured and official and worldly. Let's check this out. Google Trends. Here we do have. Let me get that up on the screen. We've been seeing this shape quite a bit. We see this shape everywhere right now, don't we? That is the shape of our times. All things finance related. That's the shape that you see no matter where you go. So yes, real estate crash is being searched a hell of a lot right now. And interestingly, I mean, it's interesting, but not surprising, right? California is the epicenter. Over here, you see they're number one in that search. Not surprising at all. And we also have Nevada, Arizona, Hawaii, and Utah. Okay. Related search queries, What makes them related? Can we hover on this? What if I get rid of my tool? Let's get rid of the tool and let's look at this. Let's hover here and see. Oh, it's just a help. So it doesn't tell us why it's related. Okay. But I do see housing market, housing crash. Okay. On to the next. Once again. So this is a search for inflation. I said it'd be interesting to see, are people really searching? Inflation's been such a big topic, especially in my communities, but I don't know what the average people are thinking. And you do see here another parabola, straight up, vertical searches, people looking for information regarding inflation. And that is also very interesting. Number one in the search is District of Columbia. They must be hurting over there. Very interesting. Indiana, New Hampshire, Massachusetts, Iowa. Okay. Okay, interesting. Related queries, Biden inflation. Biden. And now I really am going to have to do a little more research and figure out, why is Biden attached to inflation? Well, I know why. I'm not asking that. What I'm asking is, how are they calculating that those are related? Lastly, I wanted to have a look at crypto. Are people searching for crypto? The answer is no, not like they were. So again, in normie land, the psychology is they're going to search it a lot when the prices are going up. They're seeing the flashy headlines. The wealthy people and the ones that got in early need to sell their bag. And so they start running the headlines. Bitcoin on all the magazines, and you're getting advertisements on social media, and your favorite influencers are trying to convince you to buy their NFTs, which we saw crash 97%, crash in NFT action. That was according to Zero Hedge yesterday. If you did happen to check out my show yesterday. But there you have it. And I do suspect with this chart here, see how we had this little, it's not going to let me do it. We'll use it right here. Yeah. Pardon me. Let's see. I was trying to point out here, if I can get this. It's a little bit of a lag, so it's giving me a hard time. It's just going to lag up. Okay. What I was trying to point out here is you will see this shape that took place in 2016 when there was that big bull run. It looks a lot like the price chart, to be honest. We saw it go parabolic, and we saw the same here, except there's the Twin Peaks right here. But we saw it go parabolic, and now I do expect to see the searches do something similar to the price, where it goes vertical, and then you're going to see a long, slow release while all the air slowly comes out of it over time. And do I believe that it's going to go to zero? Hell no. but it's going to go down more than people want to see it go down. And it's going to take a very long time. It's going to be a long, painful process. And then I would guess sometime in the middle of the decade, we'll have another run. But I would not be thinking of buying this stuff right now. And we don't know how it behaves. In a financial depression, this will be crypto's test run. In economic hard times, they've never coexisted. Economic hard times and Bitcoin and crypto. So we're going to find a lot. We're going to find out a lot of things. According to some people, it's the new inflation-proof, recession-proof asset, which I doubt. And anyone that is at least moderately informed is also going to doubt that. On to the next slide. We have so much to do. I better speed it up already. William Middlecoop. This gentleman does excellent interviews. I believe he is the head of investment for some financial investment firm. He specializes in resource investing. I do recommend following his Twitter. And also, if you ever get an opportunity to read any of his articles or watch any of his interviews, he's really great. William Middlecoop says, this is the scariest geopolitical week since the 9/11 attack in 2001. I agree. Got the pipeline and the pound crashing. Stalin once said, there are decades when nothing happens. And there are weeks when decades happen. This is one of them. Cannot understand how gold is not yet above 2K. Soon. If you do not understand why gold and silver are not higher, then you don't really understand much about much. If you're at all interested in precious metals, it is well known why they are at these depressed prices. And when you understand the reason for that, you're one layer of onion deeper towards the truth. It is the psychology of finance. It is the manipulation. That is why it's called Psycho Silver on this channel. Next up, John writes, the Dixie destination has arrived, starting to descend and prepare for landing. So John is suggesting here that the Dixie has gone vertical right here, and then it's time. I guess this green right here is showing, what's that formation called? That is a bearish divergence. Yes, a bearish divergence. And he's predicting the Dixie to come down. This is the strength of the dollar. That's what the DXY stands for. And what we covered in previous episodes is the dollar milkshake theory. And to explain that really quickly, we are buying into the theory. I am buying into the theory that the reason the dollar is gaining strength, even though we have massive inflation, is because the Fed raised interest rates and other countries are having a very difficult time getting their hands on dollars. And because there's a race to get dollars to service the debt due to the interest rates, the dollar is strengthening. And this is why we saw the Bank of Japan suffer. And we saw the pound crashing, all related to what the Fed is doing. We are really sticking it to our allies. We're sticking it to the whole world right now. And so if I had to guess, we would not be seeing this Dixie, the strength of the dollar, come down until the Fed does reverse course and begin quantitative easing again. We are doing quantitative tightening, which means there's less of a quantity of dollars out there in the world. And the smaller the supply shrinks, the more desperate people have to be to get their hands on dollars to pay for their debt, because there's so much American debt all throughout the world. Dollar-based debt system. They need those dollars to service the debt, so the dollar is strengthening. I don't agree with John here that we're about to that we need to prepare for landing. We got another leg up, in my opinion, unless we see tomorrow that the Fed is going to start cutting rates again. But they sound like they're gonna They're going to keep going up, 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 up. Next. Here we have a post from Jonesy. Jonesy says the entire UK pension system is about to get margin called. Let that sink in. Wow. So how does a pension system get margin called? I'll tell you how. When the pension system is invested in bonds, and those bonds are subject to leverage, and they're swapped for other bonds, and they just become embedded on all these other investment products. And those investment products use leverage. And in conditions of deflation or economic tightening, we saw interest rates spike. And with the higher interest rates, it puts them in jeopardy of not being able to service the interest rates that are higher. Long story short, it's leverage, and it's all these crazy instruments that are being used. They package things up and sell them back to one another and do all this crazy stuff. It puts the pension system in jeopardy, and the bonds aren't selling because they don't trust. Nobody trusts that they're going to be paid, I guess. I don't know. You tell me. This user writes, the interesting question then becomes, how long does this futile stopgap measure last? Days, weeks, months? If something cannot go forever, it will eventually stop. When will the margin calls reappear? I think we've chosen the path of hyperinflation versus margin calls, to be honest. But even if they do keep inflating, does it not work at some point and you do get the default? I don't know. Next up. So here we had an interesting story from around the web. This is Apple's Tony Blevins gets fired after making crude remarks on TikTok. And what was this gentleman's title at Apple? He was a chief officer or something. Let's find out real quick. This is too important to not give you. We're going to search Tony Blevins real quick. And let's see what his title was. Apple VP. He was a VP. Okay. Top Apple exec. And I said, wow, he's getting fired over crude TikTok comments. He must have really said something bad. Was he attacking the LGBTQ community, or what did he say? Was this like some Harvey Weinstein? Just what did this guy do to get fired over a TikTok comment? Let's check this out.
Ooh, good sir, your car's awesome. What do you do for a living?
I race cars, play golf, and fondle big-breasted women. But I take weekends and major holidays off.
Okay. That is quite the career. I'm looking to get into that.
Also, if you're interested, I got a hell of a dental plan.
Okay. You do it all. You do it all. Yeah. And you participate in this activity. Thank you so much.
I don't know what was more offensive, his suit or his comments. I didn't find his comments to be at all offensive. I mean, it was a little bit like it was a little douchey, maybe. That suit was fucking atrocious, though. I did not find that to be particularly crude. Who doesn't like to fondle big-breasted women? Interesting. He must have really pissed off the wrong person to get fired for that. Isn't that what a guy is supposed to like to do? Are you not supposed to admit that? Or is he supposed to have more of an air of professionalism about him and is really about that? I don't know. Tough to say. Not particularly offensive compared to what you do see. Lizzo. You guys seen the Lizzo video? Oh my God. I won't play that here. It's just too disgusting. Next up. I thought this was really interesting. It's unrelated, but I had to put it out there. We did have a leaked conversation between Parag Agrawal, that's the CEO of Twitter, and Elon Musk. Parag says, you're free to tweet Twitter is dying or anything else about Twitter. but it's my responsibility to tell you that it's not helping make Twitter a better place in the current context. Next time we speak, I would like to provide you perspective on the level of internal distraction right now and how it's hurting our ability to work. I hope the AMA will help people get to know you, to understand why you believe in Twitter and trust you. And I'd like the company to get to a place where we are more resilient and don't get distracted, but we aren't there right now. And I love Elon's response. He says, "What did you get done this week?" He completely ignored the whole thing and asked him, "What did you get done?" I'm not joining the board. It's a waste of time. We'll make an offer to make Twitter private. Interesting. I love it. Here we have a tweet from Jonesy. Jonesy writes, "This time, it was the Fed that broke the Bank of England, not Soros. Since yesterday's action did very little to arrest the decline in the pound, you should expect a bazooka soon." So some of you probably aren't familiar with, you would have to do a Google search and you could just write George Soros breaks the pound or something, some keywords in that, something like that. And you will see that there was a time where Soros, and they called him a speculator, right? Because they're not going to say anything negative about him. He was a really mischievous speculator that did cause the pound to crash. And since they don't criticize this man, they really make it sound like very, very cheeky, like, ooh, this Soros is very mischievous and clever. And he played this little trick and crashed the pound. Like, thank you, George. You're so awesome. If anyone else did that shit, they would call him a fucking terrorist. They would, he gets away with it though. They would, probably have someone in handcuffs for some sort of financial crime if they did the same thing as old Soros here. I don't know if I should even be saying his name. We'll see if they harass my channel. I'm probably too small, but in the future, I should be careful even talking about this guy. But there you go. I don't know what a bazooka entails, but that's pretty crashy. That's pretty dumpy and crashy right there. I like this comment underneath. Soros is unelected. The Fed is unelected. Similar sets. You can save the currency or you can save the markets, but you can't save both. So where do they aim the bazooka? Great question. I like that one too. Next up, you have another tweet from Jonesy. Jonesy writes, Spain's budget minister government to introduce new temporary wealth tax on people with at least 3 million euro assets. And it begins. Throughout this whole chaos, I've been a little bit surprised about how quiet it's been on the end of like Spain and France. Lots of stuff happening in Italy and Germany and of course the UK. But Spain and France have been a little bit quiet, and there's probably big things going on there too, but it's so crazy out there that you wouldn't even hear it. Just for something to be in the news, it has to be, what's the word I'm looking for? It has to be outrageous for something to even get attention right now. It has to be outrageous. It has to be dire. And so in Spain, I do know I've heard and read about some pretty crazy stuff pertaining to precious metals in Spain. They do, I think they tax you yearly just to possess silver or gold there. And I know they already do have very high taxes, but it looks like an additional tax for the wealthy. It's not the ultra wealthy. If you're ultra wealthy, then you just hire accountants and lawyers, and then they help you shift profits. They help you evade taxes. They help you launder money through where? I don't know, the Cayman Islands, Ukraine, where did those, remember the Panama Papers, Swiss bank account? I don't know, they have their ways. profit shifting for the ultra wealthy. You need the lawyers and accountants though. And so this will be a tax on the lower end of the wealthy scale and the higher end of the middle class scale for sure. But the ultra wealthy, no fucking way. Not a chance. Next up, we have a tweet here from Rudy Havenstein, Risk Parity account. Today in Clown World, I present Cleveland Fed President Loretta Mester. Why is this person still employed or interviewed? Let's have a look at what she was tweeting. Let's see some of the things that Mester said. Here in June 17th of 2020, hawkish Fed's Mester. I expect inflation to decline further this year. Ooh, brutal. Let me get this a little smaller so you can see. Oh, it's not going to work. You'll have to take my word for it. Oh, there we go. It's just my browser's so slow because I have too many tabs open. Too many tabs. Let me try this one more time, and if it doesn't work, I'll just read it to you. Come on, baby. Let's read another one. Hawkish Fed's Mester. The concern right now is low. And this was in 2020, June 18th, 2020. Hawkish Fed's Mester. The concern right now is low inflation, not high inflation. Ooh. September 2nd, 2020. Fed's Meister again. With the new framework, the Fed will likely set policy with the intention to move inflation moderately above 2% for some. Oh, I remember that. They wanted to just get it up to 2%. Remember that? I remember that. They're like, we want to get it up to 2, and then it rocketed past 2, and they said, well, we want a 2% average, and since it was lower than that before, it can be 5% for a while, and then it just got out of hand. I'm sure if we and then once you get over, I won't read every single one of these, but once you get over to the right side of the screen here, they have Mester saying inflation fight will be a long one after it wasn't supposed to even happen to begin with. Inflation causing a lot of problems. Yeah, that's been the story left, right, and center, right? They told us that it wasn't going to happen, that it's not happening. Okay, it's happening a little bit, but not that much. Okay, it's happening a lot, but it's already over. And now they're just like, yeah, it's out of control. We can't stop it. And if we do stop it, there'll be mass defaults and your 401k will be gone. So why don't you just go ahead and beg us not to stop? Next up. My browser's too, I'm gonna need a solution to have so many tabs open because the browser's just so slow. So slow. Here we have a tweet from Michael Gade. Michael Gade writes, we are on the verge of losing a whole generation to investing. Underneath, here's some notable comments from two really excellent Twitter accounts. Stephen Van Meter writes, this is going to scar the youth and keep them from investing for a long time. Very true. And underneath that, Nobody Special writes, not to mention it'll be twice in 15 years for millennials. And we wonder why they're so angry. I think I count as a millennial, and I gave up on the idea of investing very early. I see silver, stacking silver, precious metals as the only safe thing to do. And it's more about protection, but there is an opportunity for some serious upside. I've known for quite a while that it's a casino, and there is no like real traditional investing. It's a casino, and you invest at your own risk. Even long-term investing just seems like a really terrible idea. And we'll find out. We'll find out, because I've long suspected, like, sure, the market goes down and it comes back up. And if you stay in it for the long, then you should be okay. That's been the story, at least for the past 100, 120 years. We're coming up to a paradigm shift, though. And this is why I'm in real money. I'm all in. Next up. Here we have a little bit of technical analysis from the Great Marti. The Great Marti here has Apple. And what we see with Apple here is it was in this channel here for quite a while. We were in this upward channel. Yes. We had this multi-year upward channel, and we did break the channel to the downside. And it looks like we retested the bottom side of that channel, and now with the broad market, this is on its way back down. And he has a little bump in the road before we fall back to the original trend line that it was on pre-COVID. And this is what I expect from the Great Marti. He's got very clean technical analysis, and he's very doom and gloom. And I don't always agree with that, but I sure do like his TA. And people fought against him so hard for so long. He was calling for Bitcoin to go down, calling for the stock market to go down. He has made many good calls, and they're all coming true right now. As much as people don't like that, he's been right. And I don't know who this person actually is, but it's a really great Twitter account. Next up. Here we have an article from the Zero Hedge. Oh no, this is not an article. This is a post. This is Credit Suisse CDs. So not only is the bonds taking off uncontrollably, but it appears that we have these CDs that's a major leg up. Oh, look, another parabolic chart. What do you know? Nearly at all-time highs. Interesting. Next, Lehman. Oh, this is credit default swaps. Okay. And so I believe, let's see if we can get into this chart a little bit. What do we find out here? We need more information on the credit default swaps. Is this a spread? This might be a spread. Here we have a tweet from James Lavish. I repeat, ignore the talking heads and look at CDS, credit default swaps, spreads instead. So we do have an article explaining credit default swaps. And I know a little bit, but we'll read this article and we'll learn together right now. Credit default swaps and contagion is simple. Yes, really simple explanation. What is CDS? You may have heard the term credit default swap back in 2008 or 2009 when the entire housing market imploded. Michael Lewis's book, The Big Short, went into great detail about the housing market implosion and how a few savvy investors made a killing investing in what are called credit default swaps. He explained a lot of it. I still hear people confused about what exactly a CDS is and how they're used in financial markets. Yeah, I would like to know no more. So let's clear it up quickly and simply here. First, a swap is a contract between two parties, like a legal document that agrees to swap one risk for another. Simple as that. I've traded many swaps in my career, typically FX, trading the risk of fluctuations for one currency and another. In the case of the housing crisis, CDS were used to swap the risk of a tranche of debt, basically a bunch of homeowners' loans all rolled into one bond, defaulting on its collective mortgage payments. Owners of the debt would get insurance on the default of the debt by buying CDS insurance. So they bundle all the mortgages together and they turn them into something you can invest in, and people buy insurance against that. Simple. That said, unlike typical insurance, you don't have to prove ownership of what you're insuring when you buy a credit default swap. You just buy it from whoever is willing to sell that insurance to you, like buying insurance to your neighbor's house. If it floods or burns down, you each get an insurance payout. You might ask, why would someone do that? Simple, really. It's all about probabilities and premiums. Payments for the insurance. The seller is just betting that the bonds do not default, and they just collect the insurance premiums for a profit. Okay, so that's pretty easy. The seller of the insurance is basically just collecting free money, because how often are these huge bonds going to default? Like never, right? Except for 2008. So you sell insurance and you never really have to pay out for it until you do. And then when there's a complete crisis and you might actually have to pay that insurance, then you're doomed. Or the government comes in to save you, right? But it's kind of like free money for the insurer. You just collect a paycheck from people that need the insurance so they can protect themselves a little bit. All that said, because a swap is basically a legal agreement, there's what we call counterparty risk. Just like a bank has risk when they extend you a loan, you may stop paying. There is risk. There is a risk party opposite to you, and in your swap, excuse me, let me read that. There is a risk. There is a risk. The party opposite you in your swap is either unwilling or unable to pay the agreed swap. The trade in effect fails, and you as a CDS owner are left holding the bag uninsured. Right? There was a lot of this when the Lehman Brothers went bankrupt and was unable to pay the CDS insurance they sold to investors. So so that it's clear then. The Lehman Brothers were collecting easy money selling this insurance. And they were like, oh, fuck it. We're never going to have to pay that anyways. It's just free money. We'll sell them insurance. These things never default. They're bonds. They're solid. They're mortgage bonds. Like most of the people are going to pay. It's all good, right? And then the day arrives where it does default and you need to pony up on that insurance and you're completely fucked, right? And in this case, the government did not bail out the Lehman Brothers. And they probably maybe thought that the government would bail them out on such huge losses. But I don't know. I guess maybe the wrong people were mad at Lehman. They just let him go under. That's enough of that. I think we got it. But here we go. There's the whole contagion thing. Contagion is pretty simple, and it just means when there's a default on debt from one company or debt issuer, there will be a contagious effect that will be passed on to similar or related companies. Yes, because they are swapping these things back and forth, left and right. No one even knows who owns what, and it's all levered. And one person owes money to the other, so when one of them goes down, they all go down. And that's the situation all over the fucking world right now. It's interconnected. It's all tangled up. We don't know the true damage of what even just happened in the UK. It could be spreading right now, and it's going to affect America. It's going to affect the rest of the world. It sounds like they avoided disaster through their pivot, but we don't know that. We'll find out in a couple weeks. But if there is a contagion, they're not going to tell us. And it can start many places, but probably in Europe somewhere. And if it's not UK, it'd be Germany or the entire EU, right? Maybe it starts here. I don't know. Bank of Japan. It's all interconnected. That's the big thing. And the leverage is what makes it dangerous. Next up. Here we have a tweet from Financial Juice. Financial Juice says, German finance minister Lander says, we are in an energy war. You think? You think? That cannot be overstated. It's all about energy. All about energy. You don't understand the world until you understand energy. Energy is the lifeblood of civilization. Stock market, I mean, the debt market's really important, which is bonds, debt market, same thing. That is the backbone in many ways, but the energy infrastructure and energy markets, it's the most critical piece of infrastructure to humanity. We are not where we are without cheap and abundant energy. That is the reason of the explosion in the world's population. And when things get weird concerning energy, I don't like to do the doom and gloom shit. It's not a healthy state of mind to be in. But when there's fucking problems in the energy all around the world, and there's wars over energy and sabotage like we saw 2 days ago, this is gravely serious. It's not cool to be doom and gloom and always be predicting the end of the world and the crash this and the collapse that. But sometimes it's true. Usually it's not, but sometimes it is true. And so we do have energy wars, and there is speculation that we are approaching an energy cliff. And if this is real, all bets are off. All bets are off. Civilization's going to change. I mean, honestly, global warming isn't shit compared to an energy cliff. To be honest, World War III, unless it gets really drastic with the strength of the weapons that are used, it ain't shit compared to an energy cliff, because an energy cliff will cause all that to happen anyways. Interesting. And I do recommend follow SRS Rocco Report on Twitter if you want to see frightening information about an energy cliff. The return on energy investments going down, and it looks really serious. Food for thought. Next up, here we have another chart from the great Marti. Google. This is clean charting right here. Clean charting. I mean, honestly, that looks pretty textbook. I don't need to add much to that. With the current trajectory of markets, I would say this looks pretty... I mean, this is really simple technical analysis right here. This is probably what's going to happen. Unless the Fed does pivot, and soon. And we begin to get that easy money again. And then we'll see everything turn around. These charts it'll be a 180, a fucking 180. And they're like the David Hunter theory. We'll be going to the moon. And you won't love it because it'll be with hyperinflation at the same time. But stocks and companies are relatively safe in an environment of hyperinflation, comparatively, relatively. But I'll stick to my gold and silver. But in a hyperinflation, stocks are better than a lot of other things, for whatever it's worth. And that concludes the world finance section of today's show. And up next, I got some gold and silver news for you. Gold and silver news. Let's take a little break and chat. Get a good drink. This is where I wish I did have an active chat room, so I could just engage, take my mind off the content a little bit, and just interact. I look forward to the day where I do get a chat room, and it'll just be like a nice little mental break to look away from the content and engage the chat, and just take a good 20 seconds away from the reading and the analyzing. Just shifting gears a little bit, a little palate cleanser. I need to figure out a way to work some palate cleansers into these shows. When they get really long, it's tiring. And I'm not sure how I'm gonna do it, but I might need to put some boobies and some butts in this show for a palate cleanser or some sort of comedy. But I'm not trying to be all stuffy and formal. Like, if I put some boobies and some butts, would you be mad? Is that not professional? I'm not trying to be professional. I just want to look at what I want to look at, and I want to talk about what I want to talk about. And I happen to like to talk about economics and finance. And I don't care if you're not supposed to do that as an economics guy. They're all so stuffy with their suits and their big words. They're using unnecessarily big words. It's all bullshit. It's a facade. And in the age of information, all these fronts are not working like they used to. I'm old enough to remember when these professions or these fields of expertise seemed impenetrable. Like they're way too smart. You'll never get it. It's a whole different world. And with the strength of the internet and the information and how much you can educate yourself, it just made everything accessible. And that's the big reason that I did get into economics and finance, is that was something that I was not supposed to be able to understand. That was for connected and important people with high educations, not me. But you come to find that it's not as complicated as you think. And as soon as you know the language, you can you can do it too. All right. Back to the content. Let's jump in there. Anytime I do see an article from Ted Butler, I'm going to read it. This guy is doing the heavy lifting in the silver space. And what do I mean by that? I mean that he does the hardcore research. There's a lot of the people in the silver space take his information that's pretty hard earned, and they discuss it, but he's in there. What's the right word? He's doing the technical work. He's doing the deep dive research as a hardcore finance guy, and he brings that information to us. And I'm very grateful for his work. And there's many people in the silver space and the finance space that do quote his work, but it can be very technical. Let's try and read this. I hope I don't get lost. I don't want to screw up the show right here by getting too deep into a Ted Butler argument. We're going to give it a try though. Looks easy enough. Ted Butler writes, "What's been occurring in the gold and silver markets is nothing short of extraordinary in the face of all objective and measurable conditions in the physical markets pointing to higher prices. Instead, prices have collapsed over the past 6 months by amounts comparable to the sharpest sell-offs in history. From the price top in March 8th, gold has fallen 22%, while silver has fallen as much as 36% in recent dealings. Yet all visible signs point to extreme physical tightness, the likes of which I've never seen. This is not a technical article. In everything from the most persistent retail premiums in silver history to a surging wholesale physical demand in India and China, all with no notable increase in actual supply. To an extent never witnessed before, the past 6 months have featured the sharpest divergence between surging physical demand and a steep and highly counterintuitive historical price collapse. Any believer in the free market law of supply and demand, it has been the strangest time ever, or at least the strangest time in my nearly 50-year experience." So he's saying, I don't know what the fuck's going on here. Prices should be going up. He's been calling for higher prices for quite a while. No one understands it. Of course, surging physical silver and gold demand and collapsing prices can't occur for no reason, and finding the reason is the responsibility of anyone interested in gold and silver. In fact, there is only one possible reason to explain the conundrum of surging demand and physical tightness, and the sharply lowering prices at the same time. And it's the reason I have advanced for more than 35 years. It's ongoing price manipulation in the Comex. While I'm gratified that more observers than ever seem to have come to grasp the basics of the long-term Comex price manipulation, somewhat ironically, we have appeared to have reached or extremely close to the termination point of the long-running price manipulation, regardless of public awareness. Ted Butler thinks it's coming to an end. The key feature of our 4 decades old Comex price manipulation has been the ability of a tight-knit group of larger traders classified as commercials to sell futures contracts short in unlimited quantities to cap and contain the silver price and gold price. This resulted in Comex silver having the largest concentrated short position of any commodity for 40 years compared to actual world production. A key component of the manipulative unlimited short selling was the refusal of the commercial shorts to ever buy back and cover short positions on rising prices, only when prices fell. This is the key to absolute price control. We might have to do a standalone video on this article. I think we got the point for now. That's a whole lot of reading that I'm not going to be able to do. So I believe we will come back and do a standalone video on this article. This is big stuff. And I don't want to bore you to death, but I hope you followed everything that I just said, because that is absolutely huge. Next up, we have dollar cost average. Gold monthly looking to close inside of the bull flag rectangle, signaling a false breakout to the downside. Yeah, it started to breach that support there. We only got 1 day left. We'll see where it lands. Actually, I'm going to take a quick restroom break, but I do have something interesting to entertain you while I'm gone. You're going to love this video. This is Catherine Austin Fitts. And she has, I watched this whole thing in its entirety and I skipped to the most interesting part. I hope you do enjoy this, and I'll be back in a split second, 2 minutes, 3 minutes max. Check this out. This is really good.
The United States. And if that is successful, you know, you have some scenarios versus others. But to me, the big question is, what is the state of play on the invisible weaponry? And that's why I think Russia and China getting together is so important in what Russia's been able to do in the last 10 to 15 years in terms of invisible weaponry. But you know, right now the planet is increasingly being controlled by satellites and invisible weaponry delivered from space. And the big question is, okay, who owns what and who controls that weaponry and how is it working? And I think a big part of COVID-19 has been the guys who control the satellites have been able to implement a lot of sort of quiet behind the scenes control. And, you know, I don't know if you saw the presentation by one of the premiers in Canada. He was asked on a public show why wouldn't let ivermectin and hydroxychloroquine become available. And he immediately segued to promoting the vaccination and then started to feel very guilty because he was ducking the question. And he said, you know, I want to thank the people who send the rain. Without the rain, the farmers will not be able to grow. And then economically, we'd be devastated. And everybody's looking and saying, what's he talking about? Well, of course, he's talking about weather warfare, which is delivered, you know, presumably from space and by satellites. Anyway, so the question is, okay, who controls that? Who controls what capacity to deliver real force from space? Big question. So, you know,
big time stuff there. What's this? Like the original NFT. Here we have a gentleman from the Silverbugs community. He has a sobriety card that he created out of silver and stamped it for somebody. I guess it wouldn't be an NFT. It's more of like a... No, it is. It's like an NFT. It's interesting. It's like, it's as if silver is so valuable because you can mold so many different things out of it. And it lasts forever. And it has all these wonderful properties. Maybe it's too valuable to be money. I love this. This is excellent. I would love to get into pouring my own silver someday, but for now, this is my baby for now. But someday, I would love to be pouring some silver and making really cool shit, especially if it's ultra valuable. It already is ultra valuable, even especially when it's recognized as being ultra valuable.
Oh my god, am I a silver girl? I did not know. I've been wearing gold my whole life. I thought I was golden. Oh my god, am I a silver girl? I did not know. I've been wearing gold my whole life. I thought I was golden.
All right, that was awful. Next up, this is a really interesting tweet. Breaking. U.S. Mint takes delivery of 57 million, what is that? 57 mm of gold from TD Bank. What is this mm of gold? Aha. 34,600 ounces of gold. Drop in the bucket. Multiple, he says, yeah, what is this? 57 million what? I don't know what to make of that, but it sounds really interesting. I'm going to follow up on this. I don't know quite what the gentleman means. So 34,600 ounces of gold. What is the MM there? Here we have Michael from Twitter, who does such a good job of following all the Comex data for us. Today, we did have 522,000 ounces exiting the vault and 40,000 added registered. So we did not see this drop as much as it has in recent days, but it's still down. It's still down. In fact, I would say that's actually quite a bit leaving the vault, although registered didn't go down that much. That's a lot leaving the vault. But usually we see far more leaving the registered. And the other thing that I really keep an eye on, pretty much, I mean, it's all important, but I love to keep an eye of open interest is 1,521% of registered silver. I like to keep an eye on that. Philharmonics Maxima says, Jan, been hearing this for 10 plus years now. Michael responds, so you're hearing the level is at its lowest since 2017 and 22 since 2012. Totally makes sense. Yeah, you do have these really super jaded people. I don't even know if they're real stackers. I don't know if they're bots or they're shills or what, but you find them in all there's okay. This is what I've always said. If you don't like silver and you're not into precious metals, I don't believe you when you hang out in these forums and you follow all these accounts and you make all these negative comments. because when I don't like something and I'm not interested in it and I think there's everything wrong with it, like I don't go to those places and interact with those people. I just ignore it. Like you won't find me in crypto telegrams and following the all the crypto accounts on Twitter and dogging them, making like telling them everything they're saying is wrong. Like I'm just not interested. And that's what you do when you're not interested. You just ignore it. You don't follow them around. But you see a lot of that in the silver space. A lot of that. I'm sure there's plenty of people that have been burned. So maybe that's why they hang out a little bit, or maybe some people that have lost hope. Because there's some big stacks out there that have been big stacks for a long time. But it's taking longer to play out than people are used to. You heard what Ted Butler was saying. I mean, it's been years and years. And that's why the move to the upside is going to be explosive. It's coming. I thought this was a useful video. I'm sure many of you already know this, but this is really cool. If I can get it to open. Here we go.
What you're looking at is 3 vials. At the bottom of each vial is pure gold. At the top is pure silver. Okay, if you melt this vial down, what you're going to get is an alloy known as 10 karat gold. 10 karat gold is 41% pure gold. Now, I know this doesn't look like 41%, but by weight, it is. Silver is lighter than gold. This is 14 karat, and this is 18 karat. You could tell the volume difference that you get with 10 karat gold over 18 karat, because the silver is lighter, you could get more volume. It's like cutting up, let's say, drugs, that people want more volume, so they cut it up and they do this type of stuff. These are beads that are used for casting. That's what you're seeing in here. This is how you make gold chains. What you want to realize from this video is that whenever you own 14K or 10K, you always own pure gold inside your chain. You have to understand you could melt it down and separate the two metals at any point in time. Keep that in mind.
That was a really great demonstration, and I had to fucking laugh. He's comparing it to drugs. What is it? I guess he knows something about cutting up drugs. Oh, God, that's hilarious. I do appreciate the video. In fact, I'm going to give this gentleman a follow on TikTok. Great video. I hope you enjoyed that as much as I did. What else we got here? I did want to show you the Google Trends for buying silver. Nothing promising there, but I will call this an uptrend. I mean, you tell me. Let's get a little line. Let's put that. That's an uptrend, right? People in Maryland want some silver. Apparently, Utah, Idaho, New Mexico. All right. I wonder why Maryland so much. They like their silver there, apparently. And I hope we do stay on this uptrend right here. That's an uptrend, right? All right. And now I only have a few more. And again, this show's getting long. I got a few more slides, a few more things to show you, and we'll call it a night. Thank you so much if you've made it this far through. Here's an article from Zero Hedge. This Thanksgiving, supplies of turkey eggs and butter will be extremely tight in the US. If you love to cook, this upcoming Thanksgiving may be a real challenge for you. Thanks to the resurgence of the bird flu, supplies of turkey are getting tighter and tighter. Sadly, the same is true for eggs. And as you will see below, reduced milk production is sending the price of butter to the stratosphere. Thanks to soaring prices, a traditional Thanksgiving dinner will be out of the reach of millions of Americans this year. And that is extremely unfortunate. Of course, this is all happening in the context of a horrific global food crisis that is getting worse in each passing day. Yes, things are bad now, but they will be significantly worse next year. Scary writing from Tyler Durden on Zero Hedge. And that was published Thursday, September 29th, if you want to go and read the entire article. much of this I'm already aware of, and they're going into the pricing of the hens and how the food's getting more expensive. The food that you feed the turkeys is getting more expensive. And I am in the food industry and I see it every day. The prices, I won't tell you where I work, okay? But I know this firsthand because I am in the food industry. That is my regular full-time job. The prices are going up almost daily. We see these batches of prices that they give us, and we change all the signs out, and we look at we can have a good look at the margin from what we're paying for it to what we sell it for, the markup and the margin and all that. A lot of these prices are going up 25 cents. It's like this: 25 cents, 25 cents, 25 cents, and it keeps coming and coming. And even the things that you see where the retailers want to be they're really dug in on keeping certain prices low because they know that people are very sensitive. There's just certain things that people look for, and they keep track of those prices and they compare between different places. Even those things are having to go up. It's kind of like the Costco hot dog deal. They're swearing up and down they're never going to mark the hot dog and soda up, and everything else is you're paying for it for somewhere else. It's getting paid for. It's not like it's it would be interesting to see a business model of just a flat markup. I wish I would see that from a business someday, particularly like a grocery store or some sort of retailer that deals in commodities. Like, this is our markup. This is the percentage. We're not going to play games with the price. In fact, we're going to save money and pass it on to you by just keeping a flat markup and take it or leave it. I would love to see that attempted. Okay, final few slides here. This was really sad here. This is on Wall Street Bets. Andrew Mojo 21 writes, "I really fucked up, boys. My dad passed away and left me $100,000 to have. I decided to trade it this week on the way down. I hammered puts on Wednesday and swung them. Work up the Bank of England belling and market out of the S&P 500 rose 2% that day. I realized the losses and now I have shit." Well, that is one whole mess of writing that doesn't make any sense, but he did post his losses down 80%. Very efficiently, very quickly turned that 100,000 to what is his final? I don't see it here, but I see really well 80%. So then, yeah, he's down 80% on 100,000. Ouch, poor guy, man. But how fucking dumb. One user writes, "Spending $20 a day from that 100,000 would have lasted you 14 years." And he does apply. He did. The OP does reply, "Oh fuck." And then this is F Robin Hood writes, "That's a lap dance a day, at least before inflation. A lap dance a day for 7 years." Edit, Jesus, I don't know where you guys are paying for so much lap dances, but you got to get your asses to Florida. The whole NFT, there's a whole NFL teams who come here for that sole reason. I won't read those comments. Those will get me in trouble there. That's also really funny too. And we did see another user with a similar post. This user apparently lost $30,000 of their life savings in one day. Tough day at Wall Street Bets. Were they planning on the whole thing coming down? People have gotten themselves in a lot of trouble shorting these markets. yeah, it looks like he was going short S&P 500. Wouldn't be the first time. People have thought this market, these stocks were coming down since like 2015. Getting torched. Very people with reputations getting torched trying to short the markets. Goodbye life savings. Ooh, brutal. Down $27,000 and he has $121 left in his account. Ouch. That is fucking. They're gambling. You can call it life losses now. it's not life savings, it's life losses. You can write that shit off on your taxes for the next 8 years or something. Actually, you can write off $3,000 yearly against future gains or losses. There's no limit. And here to conclude the show is a meme. When you found out some kid lost $100,000 of his dead dad's inheritance on short-term puts, I'm gonna head out. If you did stick through that entire show with me, all 1 hour and 15 minutes, I appreciate you. Thank you so much. I'm gonna be here every day. I'm gonna make sure this show continues to get better and better. I'm gonna bring you news about finance and economics from all over the world, and we're gonna keep a laser focus on silver and gold, the Comex vaults, the LBMA vaults, and also all the periphery metals, the nickel, the copper, the zinc, the lead, the platinum, the palladium, they all matter. We are moving to an economy of real things. It's coming. And so, with that, I do appreciate you watching the show, and I wish you a good night. And I'm going to be here every night for you. And I look forward to seeing you again. Thank you so much. And good night.